you guys based?
So Darío and me, well, I live like half of the time in Colombia. Then I'm like traveling all around, pretty much living the nomadic life. Darío is based in Medellin, and Camilo, a very good friend of the podcast, he's from Medellin, but he's currently in British Columbia. That's where you are.
In Victoria, in Canada. Hey, Max.
Hey, nice to meet you.
Likewise.
All right, guys. So let me give you everybody a little bit quick introduction. So Darío, co-host of the 10 a.m. Pro podcast. He's also my cousin. The same thing here. We've been doing this podcast for almost maybe 2.5 years. This would be episode 150. We're one of the most seen podcasts in business and technology in Latin America. The cool thing about it is that about 80% of the people that do watch actually love the podcast that we do when we're in English. And Camilo, he's a very good friend. We went to engineering school together, and he is the general partner of one of the largest venture funds here in Colombia called Vero Norte. And today, just for the audience that is watching, we have Max Kaplan from the CTO of Cypher, Solstrategies. So it's a pleasure to have you here today, Max. I wrote to Leah, I don't know, I've been hounding her for like 2 or 3 months. And then she said, no, this is interesting. Let me forward this invitation to our CTO. Because I've seen you in a couple of podcasts. He will be the right person to talk about Solstrategies, the technical aspects, because there's one thing I can tell you. We're the Solana #1 fans in Latin America. We've had so many guests where we talked about Solana. We had Joe McCann from Asymmetric. We had Kyle Samani, Jesse from Nosana, a whole bunch of people that have just told us a bunch of interesting stories around the Solana ecosystem. But first, let's start with you. Just give us a quick bio, and then we'll get the ball rolling, and we'll start asking you questions regarding Solstrategies and why you actually picked Solana.
Awesome. Very cool. Well, first of all, thanks for having me. Really appreciate it. So my name is Max. I'm the CTO of Solstrategies. First got into crypto really in early 2017. I had invested in Bitcoin a little bit before then, but I didn't really fully jump down the rabbit hole. But, it was like I bought Bitcoin in 2014 and I didn't really think about it. But then I read this article about Bitcoin and I was like, oh, I remember I bought some Bitcoin in 2014. Let me log into my Coinbase account at the time and let me see what that's worth. And, I bought $100, then it was worth $500. And I was like, hey, I think I should start diving deeper into the rabbit hole here. So started doing some really small open source things, a few things in Bitcoin Core, Lightning, things like that. And then that actually led me to work at Kraken, where I was one of the first employees there. We were, at the time when I joined, the company was 100 people and I was the 10th engineer. And back then, trying to describe working at Kraken, you couldn't say a cryptocurrency exchange. You kind of had to start one level higher and be like, you've ever heard this thing called Bitcoin? And, maybe 5 out of 10 people that, I would talk to, had heard of it. But anyway, worked at Kraken. We were trying to see if this whole crypto thing would take off. And then, it did. And Kraken grew from 100 people to 3,000. And I ended up leading DevOps and data engineering there. Did some really cool stuff. And I did 6 years at Kraken. And
wow, 6 years? Wow.
6 years.
Impressive.
Yeah. And really when I started to notice that Kraken was a centralized exchange. And in early 2017, that was really all that was possible. But I started seeing, all these decentralized exchanges starting to pop up. And that really interested me, because I was working in trading. We were so focused on optimizing for latency at Kraken, especially in the DevOps world. And, I made my first transaction on Jupiter and I was like, damn, this thing is freaking awesome. So jumped in, started a validator called Orangefin Ventures after Kraken. Did well. Solstrategies acquired it, and now I'm here.
Wow. Pretty cool. Pretty cool. So tell us a little bit about kind of the genesis of Solstrategies, because it was a well before established company that was actually called Valkyrie. But I'm mostly intrigued. I mean, and the ticker is Cypher because it used to be Cypherpunk. But what I'm really interested is you were into crypto and and Valkyrie was looking into a whole bunch of different things. But then suddenly you realize that the most important thing or the focus was Solana. So tell us how you actually came about deciding, or why Leah and the rest of the team specific focus on why Solana.
Yeah, absolutely. So just one caveat before that really quick. Solstrategies was called Cypherpunk before. Leah's former company was called Valkyrie, and they were the ones that created like the first Bitcoin ETFs, but those were actually like separate companies. But just wanted to caveat there. But to talk about the genesis of Solana, great question. Cypherpunk Holdings was really the first company to really first public company to put Bitcoin on its balance sheet. And in Canada, it actually has a ticker of HODL, which shows how OG it is. So on the Canadian Securities Exchange, the ticker is HODL. And so really the first public company. And then this is obviously before my time at the company, but really I would say this, that the company the company really believes in high throughput type blockchains, right? And, we don't like Leah, for example, created the first Bitcoin ETFs, hardcore, she loves Bitcoin. And so do I, right? Like I have commits in, Lightning, Bitcoin Core, like all this stuff. That's how I got, my footing. But, Bitcoin and Solana are two different things, right? Or we view like Bitcoin as an asset, but we view Solana as a network. And the company just got extremely bullish on Solana. And we really saw this need in the market, like a desire in the market for, people to get exposure, because as we see with other companies like, MicroStrategy, not everyone wants to, buy spot Bitcoin or, so we saw this market to really track Sol. But like, I do want to just say one more thing is that I think one of the big things that like we try and talk about the most is that we don't want to be known as a NAV play. Like we view ourselves as a Solana tech company. And by us going with a Solana treasury, that just shows how much we are willing to double down on our investment, right? And people do talk about us as like the MicroStrategy of Solana. And in many ways we do, right? But like to us, it's not that like we're trying to copy MicroStrategy's play. It's that we are so bullish on Solana, let's go and buy some. That's the way we view it.
So here's the interesting thing. I mean, obviously we know we're not as technically savvy as you are, but we're still nerds deep inside. I mean, such a degree of nerdism that actually the first Bitcoins that we bought was like, I don't know, Solana 2013. It was $100 in Coinbase, just because I overheard a couple of guys talking in San Francisco in the Mission. Oh, the Stellar Lumens and Bitcoin, and we're buying it through Coinbase. So like, yeah, this is interesting. Let me dig in. And then because we continued exploring and we saw the uprising 2017, the dip. Then suddenly in 2021, I started reading about Solana, and we put a significant position in Solana. Obviously, it went to like 280, and then it went down to the whole $8 FTX collapse. But then we DCA'd our way into more Solana. And then suddenly, I don't remember Camilo, because we were constantly reading and trying to learn. Solstrategies appear under the radar. Full disclosure, I'm not heavy, but I do own a significant portion of Cypher. I think I picked it up initially at 30 cents or 60 cents. Nice. I do not remember, but I don't remember, Camilo. You're right. Solstrategies or Cypher was introduced into the chat because the podcast is just the product of a big chat that we have with 100+ investors that we talk technology and crypto all day long. But we started seeing or got interested in Solstrategies because we thought it was going to be a MicroStrategy play. But then as we were preparing for this podcast, we started reading and learning about what is it that you guys do. In fact, I constantly have on my tabs the website of Lane, which measures. They have very good tools that measure. I mean, what's the epochs, what's the APY on the different validators, and also I'm still staking Cogent Crypto, which is part of your network. So by some means, we have always been kind of like learning about you guys, but then But then it struck me, and this is what I told Camilo and Dario, we needed to have a conversation with you. It struck me that the best way to be in, it's kind of like a grizzly bear just taking advantage of salmons going upstream during the whatever season, because you're grabbing everything. It's the best way to extract all this internet capital markets going into Solana. So I'm very curious, why don't you take a deep dive and explain why owning validators is an even better strategy than just hodling Solana or just staking Solana? What does it imply? What does it mean to have a strategy of like, no, I'm just going to purchase validators? In fact, I don't want to extend myself, but I told Camilo, you know what? I tried to set up a validator. If you're not savvy, it's too complicated because it's the cost of the box. Then you have to connect it to high bandwidth, and then you have to stake X amount so that it's viable. I think it's like 20 or 25. It's just too complicated. But I told Camilo, what's this token that was going to be airdropped or participated? That it's from Austin Fedora double. Is it double zero? Double zero. It's like, dude, Camilo, this is the way to actually have exposure to the engine, because you know what this looks like to me a little bit, and I use this analogy a ton of times, is I remember Chris Sacca was tasked with buying a whole bunch of data centers so that they could index the pages, crawl, so that Google can actually give better result. So when I see someone like, you know what, let's just buy validators at scale, it looks to me like, okay, they want to reap the rewards of just everybody. TradFi, RWA, it's moving. So why don't you elaborate on that very long question?
Absolutely. Great question. Two kind of answers here that I want to talk about is like, number one of our goals is obviously to acquire as much SOL as we possibly can, right? And what's different than say Solana versus Bitcoin is that on Solana, there is native yields, right? So if we are going to make the MicroStrategy analogy just for a second, when MicroStrategy goes to purchase Bitcoin, they're issuing debt to go to buy Bitcoin, right? Yeah. And, we do that too. And we don't like MicroStrategy is great. Sorry, strategy, we have no issues with them at all. We think they're fantastic actually. But with Solana, there is native yields, right? And this is going to be a two-pronged thing. So number one, if you are staking to a validator, you're earning native yield there. However, as a validator, to run a validator, as you mentioned, like running a validator can be extremely expensive, right? There needs to be incentives. On Solana, if you are, running a validator and also staking to your validator as well, you are generating much more SOL, right? So like on the side of, and there's another interesting point, but on the side of like, okay, let's go and acquire as much SOL as we possibly can. By running a validator, by running multiple validators, we can acquire more SOL in a much cheaper way, right? Because of the fact that we're not issuing debt. And we do a part of that, right? But for like the validator operations, the SOL that we get there, we're really just generating for free. And on the second part, which is like really a really interesting point, is that on Solana, let's say you have like 100,000 SOL staked or 2 million SOL staked to your validator, the economics in terms of your costs do not change at all, right? So the costs are fixed. And in that case, the more SOL that you get delegated to a validator, the more profit there is and the higher the profit margin is, right? So really, once you get to like a break-even point with a Solana validator, which is like not cheap to set up, right? Like
it is not cheap. Yeah,
it's not cheap. Like just the hardware costs alone are like $700-800 to $800 a month. Not including anything you're staking, not even including like all like bandwidth overages and things like that. But if you can get to a point of which like you are sufficiently staked, you can make a serious amount of profit, right? And really the whole goal for us, so really if you break down our company, we have a huge treasury that is holding Solana, but we are really also a staking company right now that, we have 3 million SOL delegated to all 4 of our validators. And really what we really are trying to be, and to talk about like the overall thesis, but we believe so strongly in Solana, right? We believe really strongly in, just internet capital markets, right? Leah comes from an ETF background, at Valkyrie, she created some of the ETFs. I come from, centralized exchange trading world. And I'm really, really, really bullish on this concept of decentralized NASDAQ. And by running a validator also, when that whole Trump meme mania happened, that was by far our most profitable point in time with anything, because we're reaping the benefits of all that DEX volume, right? So if you believe in DEXs, if you believe in, Solana on chain, validators are really one of, the best investments that you can make. And especially for a company like ours, where one of our missions is really just to acquire as much SOL as we possibly can. So at a high level, sufficiently low level, that's pretty much why.
Max, could you talk a little bit about so I see a couple different investment strategies within Solstrategies, and one that you've just mentioned is acquiring validators.
Mm-hmm.
I roughly understood the economics you explained, but could you talk a little bit about what you look for in that investment strategy? What makes a validator better than another one? What are the different types of strategies that you're seeing in the market that are appealing to you?
Yeah.
And then maybe this is a long question, but maybe then why is it interesting for you to buy them versus building them?
Absolutely. Okay. So let me get into that. There's a lot of things we look at, right? Now, I would say in no particular order, these are the things that we look for, really. We do want, validators that have a good amount of stake, right? Reason for that is that, stake can be particularly pretty sticky, we don't want stake to leave, right? The more stake you have, if I didn't make this clear, the more stake you have, just to the audience, the more stake you have, the more money you're going to make, really.
So stake, you mean delegated to the particular validator?
Yeah,
so
and in particular,
other people, Solana staked through that validator. Okay.
Bingo. In particular, third-party stake, right? So we're really looking for, a third-party stake. The second thing, which is kind of a subset of that, is really the median stake, right? So let's say, for example, you have two validators, one that has, 600,000, both of them have 600,000 SOL. However, you have one where one of the stakers is staking 500,000 SOL, and then a couple other people are, staking the other 100,000. You run a real risk there in that if that one big whale who, is staking 500,000, on stakes, you're going from very profitable to barely breaking even, right? So in the past, we've really looked for median stake, right? And what I mean by that is we want we like to see as many people staking as possible, where the median amount of stake is in that 1 to 10 SOL range, right? And the reason for that really is just so you're not really fully reliant on one customer, which is very similar to a lot of SaaS businesses, right? You don't want 80% of your revenue coming from one customer, right? So historically, that is really what we've done. Now, on your question on why not run our own, in fact, we actually do, and we run a Solstrategies validator. Talking about, though, a little bit more about the acquisition strategy, we're running four validators. It's really 5. We just announced a partnership with Pengu, but let's just put that one aside. We're running 4, and they run different economic strategies. So, for example, with OrangeFin and Cogent, those both charge no commission at all, and those can serve a certain type of clientele, right? Maybe someone that's retail focused, your person that's just super in the weeds, that's going to be looking at all the data and wants just the absolute highest APY. And when I say no commission, by the way, that's only on inflation, not block rewards. I know we're getting technical here, but happy to dive into anything. So 0% inflation commission, 0% MEV commission. Then on our other validators, we have a Solstrategies validator, and we have a Lane validator, which is our latest acquisition. Those are both 5% inflation commission, and then about 5 to 10% MEV. Solstrategies is 10, Lane is 5. And those serve a different type of clientele, right? Happy to get into those details there, but really in general, we're really like kind of offering this like different menu because we do want to target retail, we do want to target institutions, and there's we also are a public company, right? So our goal is to one of our goals is to increase shareholder value, right? So you need to make some revenue, right? And in all of our validators, we're making a good amount of revenue, but the ones we're charging higher commission on, those obviously come with higher revenues. So that is really the acquisition strategy. Hopefully that answers your question.
I do. Yeah, it does. So there's this economic piece that I understand perfectly now. Yeah. And I was wondering if there's also a technology piece. If validators somehow differentiate themselves, if they use different hardware or different validator clients, different software.
Yeah.
Because I think I read somewhere that you guys do have different validator clients. If maybe you can, give us the high level of what that means, and if there is a strategy there to differentiate somehow one from the other.
Excuse me. Yeah, absolutely. So, I would say that's certainly part of our strategy post-acquisition. I don't think that's necessarily part of our strategy pre-acquisition for targets. The thing we look pre-acquisition is really like brand and median stake, right? And really the reason for that is that, really in general, like validators are mostly like kind of the same thing, right? For the most part, right? Like, if you and I are running a validator at the same commission levels and the same performance, it really comes down to like brand and marketing and how many clients that you have, right? And like pre-acquisition, that is really what we look for, right? Because if you look at stake, right, there's many things that like lead to having more stake, right? Brand, all these types of things, right? It's really just like a marketing thing, no different in like the Web2 world. Now post acquisition, we're able to do really interesting things. So right now we're running 4 validators. 2 of them are running FireDancer, right? Which is Solana's new client, built by Jump Trading. Which is really exciting. Right now, it's actually called FireDancer because it's not like the full FireDancer. But we were one of the first validator operators to go and run FireDancer, right? I'm going to use FireDancer and FireDancer here synonymously, but I do mean FireDancer for those that are technical listening on the call. But for the non-technical, I'm just going to abstract this as FireDancer. We're able to do that, right? We're able to be on the cutting edge, and we really want to be seen as a company that's actually helping to build and Solana scale, and being one of the first to support FireDancer was, was really important to us, right? Because, we do hold a lot of SOL. We invested very heavily in Solana. FireDancer is bringing a lot of very promising things. And by running 4 and being able to, I don't want to say experiment, but kind of experiment, right? And run FireDancer on 2 of them. We're doing our part, and we've caught bugs, we've caught issues, things like that. We're in talks with like not only Jump Trading, but a bunch of other validators who are running FireDancer now. So that is part of the strategy.
I get it. Just a quick follow up to that. There seems to be. As you just mentioned, I heard Leah on a podcast talk about this vibe component around these networks. Mm-hmm. And some networks, are get the full wave. Like I think Solana is now, and but then there's the challenge that this is highly technical. This is very sophisticated. And Solstrategies had decided on this one chain. Although I do believe some of your validators have exposure to others, but I think that's not strategic. That's just came with the acquisitions. How do you guys view that risk? Is that manageable? How do you guys think about that inherent nature of this blockchain technology that does go with what the crowds think when technology is not enough to differentiate?
Yeah, I mean, it's a great question, right? And I'm gonna kind of start like high level with a personal belief that I have, but I think in life you got to take big bets, right? And you got to take big calculated bets. And we feel really strongly about Solana, right? And for I think there was an echo. Sorry. But
no, we're good.
Yeah. Okay. For us, we feel really strongly about Solana, right? And there's so many different data points you can look at here, right? Now I'm going to start talking about managing risk, right? But, if you compare Solana to, say, its closest competitor, right, like, which is Ethereum, if you look at things like DEX volumes, active addresses, like pretty much every major metric really besides TVL and stablecoin supply, both of which, have a huge component of how long those networks have existed, Solana is winning in just about every major metric, right? And you mentioned a really good point about tech, right? And tech might not be good enough. And that could certainly be true. I do think it's like a huge component of it. But even if we just say like it doesn't matter at all, if you look at in terms of how many, oh, by the way, another metric, developers, right? Like the last developer survey, Solana had the most developers of any chain, right? And revenue is the most important. App revenue, Solana apps are making the most amount of money, right? So if you
non-memes, without actually,
right?
Non-memes.
So if you look at in terms of what Solana has today, pretending the tech doesn't matter at all, just for a new network to come out and take that away from Solana, in my view, has to be a new network has to be 10x better. And that is the reason why I think Solana succeeded, because Solana is a 10x improvement over Ethereum, right? There's like a lot of other EVM equivalents out there. I might get a little technical here, but you have like Avalanche, you have like a bunch of others, right? And like they do a lot of really cool things, but like how many times do you switch banks in your life? You barely ever do. You're only going to really switch banks, if you're getting like a 10x improvement. And people switched away from Ethereum to Solana because it was a 10x improvement. Now, our view is really that, there could be a 10x improvement, but I don't know if I fully see it in the next, 5-10 years. But even if there is, Solana has such strong momentum right now with so many developers building on chain, so much liquidity, so many apps, so many things there that we see it as very unlikely in our view that, a new competitor is going to overtake Solana. Could they take some market share away? Absolutely. But like, if I'm thinking about it from a developer point of view, which is what matters, right? I'm thinking about where would I have this app idea. Where do I want to deploy it? I want to go where I'm going to make the most money. I'm going to go where the most users already are. And both of those things are Solana, right? So a new network that comes out, really has an uphill battle to fight. And, to answer your question on managing risk, our view is really just that we don't see, in the near term future, any network really overtaking Solana here. And because of that, we saw a huge opportunity. Let's double down, let's get involved, and, let's go all in. So that's the answer.
Thank you, man.
Okay. Max, I'm going to elaborate on what seems a long question, but sometimes I feel that people that are outside of the US sometimes just get much easier what the concept of the blockchain is.
Yeah.
So because we don't have the US dollar, we have the peso, we have the Argentinian peso, we have the Bolivar, the Mexican peso. So we know what inflation is. And so that being said, we have always looked for products where we can accumulate, let's say, stable coins, USDT, USDC, and we found this credit card that's called CAST. We even had the CEO, Rags, very cool product. All of us in our chat, in our podcast, we use CAST. But what really intrigued me is that Rags mentioned, by the way, you could get better CAST points if you actually stake in our own validators. And when he said that, I immediately understood, of course, you already have a big number of users that they do have Solana. Why not tell them to stake on the CAST validator? And you, by the way, it looks like you're doing a favor to them because you're saying no commission, but in reality, you're reaping the reward. So again, another way of capturing all that internet capital market. So that being said, what is it the things that you look for? So for example, is it the movement of stable coins? Is it the movement of just memes? I just posted today to Camilo on the chat that Trump is filing for an ETF that just holds the Trump memes. And I just think, well, this is wonderful because the buying and selling of those memes has to happen in some sort of validators. And, those transactions need to be accrued somewhere. And so in that order of things, what are the things that Solstrategy considers there's the most possibility? You mentioned that the meme day was just the most profitable day, but what are kind of like the 5 things that you say, okay, here's where economic activity is happening and we're extracting rewards because our validators are actually going to serve? What are like the 4 or 5 things that Solstrategy teams are like strategic? And because, you know why I like this question? Because it is you telling us the truth of what are the things that are actually happening, and not just a bunch of like articles that have been written on CoinDesk, Expos. It just tell, look, this is the economic activity. It's the settlement. It's like this chart that I also shared. Like, everybody's doing business with China, but then you look up who's using Tether, and it's almost the rest of the world using the US dollar.
Yeah. Great question. So let me dive into that a little bit. But before I do that, I kind of want to separate. So like we have this view in my head, definitely. But you have like store of value assets, which is really just Bitcoin, and then you kind of have these high throughput networks. And I want to just put Bitcoin aside here, because we're only going to be talking about like these high throughput, or really just like let's just call them like smart contract platforms, right? Like so from there we look at a few different things, right? But high level, I'm going to break this down. High level, it's activity. Okay. The technology is really only as good as in terms of like how well it's solving a business problem, whether that's in crypto or not, right? Like there's plenty of really bad code out there that is like, making a lot of money, right? So like code can only really be viewed as in terms of how well it's solving a business problem, and activity is like a very good abstracted term. But let me break this down a little bit more, because we look at a variety of different things, but one of the things that I'm most passionate about is trading, right? I worked at centralized exchanges, and I will say this, that Kraken is probably one of the most fair out there. So this is like, not anything to do with Kraken. And in fact, I think cryptocurrency exchanges overall are much more fair than like, your traditional TradFi, NASDAQ type things. But like the trading is just not fair on, centralized exchanges. And again, I don't mean just crypto there. I just mean in general. But I mean, you have people there that will pay millions of dollars to go from a cable that's this long to this long, because they're all co-located in the same data center, and it takes a shorter amount of time for the speed of light to travel across a shorter cable. And that could be worth a couple $1 million for them, right? So we really buy into this view of decentralized NASDAQ, right? We believe that's going to be. We believe that there's a very high likelihood that happens. And there's a few things I want to talk about here. There's so many different things, but we're just talking about centralized exchanges for right now, centralized cryptocurrency exchanges versus decentralized ones. I think decentralized exchanges have a tremendous amount of advantages. And this is one of the things we look at, which is DEX volume. Talk about why. Here's the thing is that like we were just talking about like the Trump meme coin, just as an example. I'm not saying I support that. In fact, I'm not the biggest fan of meme coins, but I do think they have some pluses, if you're looking at silver linings. But I have to say, like, I'm not a fan of like extracted meme coins whatsoever, just so everyone knows. But to talk about centralized exchanges versus decentralized exchanges, if you really look at this past cycle, most of the things that were like contributing to the most amount of volume were some of these meme coins. But if you look specifically, it was in the first few minutes of when those meme coins launched. And for a centralized exchange, it is so hard for them to list a new token. They got to go through legal review. They have to have someone and do the work. Whereas a decentralized exchange, that happens the first second, right? So in our view, a decentralized exchange, like it's going to be orders of magnitude better than a centralized exchange in the view of asset listings, because it's next to impossible it's really impossible for a centralized exchange to compete there. Second of all, UX, right? If you go and download a centralized exchange trading app, for example, first thing you got to do is you got to take out your license. You got to go and scan your, you got to go and scan everything. You got to put on all your information, then you got to wait to get approved. It takes like 15, 20 minutes. With Solana, you can download Phantom. You just use Venmo, which is a rail like a lot of people in the US are familiar with. There's a lot of other rails, something they're already familiar with. And boom, you're starting to trade within less than a minute, right?
Yeah.
So tremendous user advantage there. I do think centralized exchanges have their places, but, I'm going back to your question about like what we look for. Like another big thing is stablecoins, right? We are like a huge believer in stablecoins as well, and, I'm in Florida. I know you guys have like Latin American background, but, there's a lot of people that, come from, I used to work with a lot of people from Venezuela. And one of the first things they told me was that their dollar was worth like 25 cents at the end of the month, right? And, there are people that, would like to hold Bitcoin, but at the end of the day, like Bitcoin is a very foreign concept to those people. Stablecoins is very, natural. And, I think it's crazy that all of us here are talking in real time across the world. But yet, if I want to send a wire transfer or a remittance, I got to wait days or sometimes weeks for that to go through in 2025. That's crazy, right? So sorry, it's a long-winded answer to your question. But it really comes down to like activity, but broken down by, DEX volumes, stable coins, and really like number of users and developers. That's how I would answer it.
And you see any kind of like play in like real world assets just going on chain? Is that something that you look as an opportunity too?
Absolutely. I think this is going to be a huge year for real world assets. Like I think 2025, I think is going to be the first time you really see like true RWAs on chain. And I think it's coming sooner than most people think. I think it's, probably next quarter. There's going to be some real interesting RWA use cases for Solana that we're really excited about ourselves.
So kind of to like summarize it for the audience here. So basically you're saying, okay, we follow Tolly's philosophy, NASDAQ on-chain but 3 or 10 times the speed, right? But the advantage of having a validator is, well, you're participating on that, but you're like, remember this movie Hummingbird, which is the high frequency trading, but you're just like the laser beams at the real end that are actually capturing the flow. And so you're saying you want to capture the flow of everything every transaction that NYSE, NASDAQ, and every single exchange, because they'll eventually realize that, you know what, there's a better opportunity of just doing it here because it's much more efficient. And you see it in every single fee. When I buy a call option, the on E-Trade or whatever, the fee on the bottom part is 4.95 or 50 cents. It's just absurd. And if you're going to do that X amount of instances, it's not important. And then you say stable coins, because as much as important as Bitcoin is, the reality is that no one is pushing and sending Bitcoin all around the world because it specifically uses store of value. So stable coins have always been the biggest Trojan horse that is out there. And then you say, well, it's real world assets because it's people doing real stuff. I like to pair this with the podcast, Camilo, that we had with Santiago Santos, which basically has this big strategy of saying, hey, let's bring GDP online, which is, you know what, I'm just going to buy a whole bunch of mobile network virtual operators, kind of like Helium, but in Mexico, because I want to bring all this activity on chain. Well, too bad that he currently is thinking of only Avalanche because he wants to build his own economic thing. But those are the things those are the things that you're capturing by being a validator.
Exactly. Okay. Any activity that happens on Solana, we are capturing as Solstrategies by running a validator. Right?
Just out of curiosity, when you think about internet capital markets, do you have a number ascribed to that it's currently, let's say it's 2025, but in 2030, the internet economic activity that the validators will capture? Do you have like projections? Do you think in those terms, or how do you visualize it?
Yeah, well, there's a lot. We can get really in the weeds on this one, but there's been a lot of interesting proposals on Solana. Okay, so if you want to talk about capturing real world markets, I don't think I have a number there, but I think what I do have is I do think that we will start seeing full on IPOs and stocks that are also traded on chain, where you can start holding stock like a traditional brokerage, or hold it on chain and trade on exchanges on chain. I think that will happen either the end of this year or early next year. And I think by 2030, that's going to be a pretty common.
But by the way, the biggest problem that all my friends have is like, hey, I want to buy Tesla, I want to buy Palantir. It's impossible because I mean, how do you buy? It's always some sort of like synthetic that it's a little bit it doesn't feel unless you have access to a brokerage. So yes, I think that's.
Yeah. No, and I, you know, I'm an American, right? And Solstrategies is a Canadian traded company. And even for me, it's hard to get access to a brokerage that can even trade it. But I do think for sure by 2030, but well before, like I think by the end of this year, we will start seeing like full on IPOs on chain. And maybe not full IPOs, but I will definitely say this, that you will be able to hold stock on chain by the end of this year. I think that, like, here's the thing is that we could look at meme coins and, we could say like, okay, like they're super extractive, and in 99% of cases, they actually are. But like, if you're going to try and find something good out of that, like the way to look,
a stress test is just the best stress test of all.
Bingo, right? Like if you look at, I don't know if you guys knew this stat, but this was like one of the craziest things that I found, but the day the Trump coin launched, Solana dexes did double the volume of both Kraken and Coinbase combined, right? So the two biggest US exchanges, Solana processed double the volume of them combined, right?
And it didn't flinch. And it didn't even flinch.
Yeah. Right? Exactly. And, like to hit like the next order of magnitude, for sure, we're going to need to do things to further scale out the network and things like that. But that is a crazy statistic where like 2-3 years ago, no one could have ever imagined that. And, when people see this, right, like institutions see this and like the numbers, like the volume numbers are impressive. In fact, like so many of the DEX volumes today, like beat some of the biggest centralized exchanges in terms of volume. And, if you're really looking around in terms of what network are you going to build on, in the RWA market, whatever, like, if you want like real volume if you want to process real volume, Solana is really the only one, in our opinion, that we see, right? That has real users, real apps you can trade on with real UXs. There's just no other network out there that can do it in a fast way. Like if you're talking about like, cool, like, Ethereum can with like all of its L2s, but you got liquidity fragmented all over the place. Ethereum's got 12-second block time. Solana's 400 milliseconds, right? So many tech improvements are coming. Just like next week, there's going to be it probably will be next week, but the next version upgrade, we're going to get a huge boost where we're going to be able to process 20% more transactions. I mean, Solana is just moving so fast. It's able, the speed at which it's scaling is incredible. And I think it's only inevitable that more things and more volume across many different verticals are going to move on chain.
Yeah, Camilo, let me ask the last question in this segment so that we can shift gears. Max, how do you attract stake other than buying validators? What's the current strategy? Because when I saw the Pengu strategy, I'm like, okay, it makes sense because they have a big brand, and so people are going to start asking, well, should I put my Solana and this validator to, I don't know, to get an airdrop of Pengu, whatever it is. But how do you attract stake other than just acquiring validators? Do you have a current strategy? And I'm just going to mention that, for example, the guy Mert from Helios has done an excellent job because he goes super technical. So everybody that has Solana but is technical goes and stakes there. But that's like about 3%, 2% of the Solana holders. They're not very technical. What is it that you do to attract stake?
Absolutely. Fantastic question. There's a lot of things that you can do, but I'll start with this, is that over the past, like really like 2024 and early 2025, we were primarily focused on inorganic growth. And what I mean by that is really like your acquisitions that you saw, right? I joined the company at literally December 31st was my first day. So I just started getting here in 2025. And we've really pivoted now. I don't want to say pivot, but like for the most part, we're really focused on organic growth, which is like going to start answering exactly like what you're asking, right? And to focus on organic growth, we mean third-party delegations, meaning, someone else, maybe who's ever listening to this podcast, is stake to our validators. So how do we go and attract stake? Well, there's many different things that, we can do. One of them, like one example is on two of our validators. So the last epoch, Orange Fin Ventures, which is the one I started, was actually the highest yielding validator on all of Solana, right? We have a lot of software optimizations on it, but it's also 0% inflation commission, 0% MEV commission. People notice that, there's tons of different sites that rank validators by APY, and we actually run one called StakeWiz, but there's others as well. Origin was the #1 yielding validator there. That's for one specific segment, right? Kind of the more savvy. Kind of going the other way, which is more institutions, and there's many things we do on each, right? Oh, let me cover retail. We've also launched a mobile app on Solana mobile, but that's coming to iOS and Android. When I'm talking, probably this week or next. So we're gonna have a full mobile app.
Give us the link so that we can share it. So that people.
Absolutely. So we're going to do that on the retail side as well. It's already in the Solana mobile store, like I said. On the institutional side, there's a few different things that we do. So #1, institutions, much different game, right? As much as I would love to say that you just go and you send a institution hey, go and stake with our validator, and you're just hoping they pop up their ledger and they go and click the stake button. That's usually not what happens, right? Usually there's contractual stuff involved and things like that. But even a prereq for all of that is compliance stuff, right? So there's certifications like ISO 27001. We're ISO 27001 certified. SOC 2, we're SOC 2 compliant, where we're going through the certification process as we speak. That's there. Also just being a part of a public company, Leah's also always talking to so many different institutions here and there. Just and sometimes when you start to explain Solstrategies, you really have to start with what is Solana. And we do that. Sorry, were you about to say? Did you want to?
Max, so with this launch of new ETFs that are actually happening in Canada, are they knocking on your doors to say, hey, look, we have it, and are we staking with you, or they have to do that with the broker? I mean, how does an ETF say, okay, let's buy spot Solana, win the rewards, reap the rewards of the yields? Do they go to you? So actually, the more ETFs that are launched, the most likelihood they would go to validators or companies like yours, because you're a public company and you're ISO certified. Is that something that happens?
Definitely. What I can say is this: is we've definitely had conversations with a lot of ETF issuers, and those processes, it's not just, you call someone on the phone and you say, hey, I run a validator, you should stake with us for your ETF. Those are a little more involved, and they come with a lot of due diligence. And, we have experience a lot doing that. We have all the certifications, are able to send a certification. We also publish them all for online transparently. The website is actually trust.orangefin.ventures right now, but we have a trust center. You can get our ISO 20701 certificate along with all of our policies. That is definitely something, we definitely are talking to ETF issuers, and, we'd like to be a part of that for sure. I think another thing is really just, meeting customers where they're at. A lot of these institutions, for better or worse, don't always self-custody. Some of them have to, for regulatory reasons, or just to make their documents smaller, have to we'll use a custodian, right? Whether it's Coinbase, Publico, Anchorage, one of those, right? If they self-custody, in some of their public documentation, it adds probably an extra 5 pages of disclaimers, right? Where if they use a custodian, it makes it so. And there's other reasons too. I'm not trying to just say it's because of that. So partnering with custodians and things like that. Definitely. So we announced a partnership with Tetra Trust. We're definitely looking there as well, and doing things there.
Camilo.
I think you also have even a regulatory competitive advantage, given that you stake on your own balance sheet. That differentiates you from others that are just receiving a delegated stake. That puts you I think I understand that, in a different category, to be able to, I don't know if the correct word is to market the validators, but it's different from ones that could be perceived to be, engaging in other financial activities. Is that correct?
Yeah, I definitely think so. What I'd say on that is that, I think if you look at a validator, one has 100,000 SOL and one has 400,000 SOL, you're going to look the one with 400,000 SOL with a higher regard, right? You know, like, okay, it has more soul. And I think the number being higher certainly helps. You know, also, I think it just shows like how, like, you know, here's the thing is like, I always talk about like other staking providers. I don't want to talk poorly about anyone, right? But what I'll say is this, is that like other staking providers, like the bigger staking companies out there, they focus on so many networks, right? You know, Ethereum, Solana, Avalanche, you know, like all these different networks, you know, Cosmos, there's just like, you know, so many different networks that support staking. And, you know, as someone that used to work at a company like that, you never get to know the ins and outs of every single network. And there are just things that are unique to each one. Ethereum has them. Solana certainly has them. You know, every network has these like little advantages here and there that you get by like, you know, we are exclusively Solana, right? We stake to our own validators. What a message we like to share with everyone is that like, this is our focus. We're not just going and like, you know, you're not going to have someone that's just going to be like, oh, you know, like we have like a huge like Ethereum thing we got to deal with today. Like we're not doing that. We are exclusively focused on Solana. We let the numbers speak for themselves. Like, you know, I just talked, you know, one of our validators, you know, like we do like, you know, we do pride ourselves on some of them at being like the highest APY. Orange Ventures, like, you know, when we recorded this was the highest APY on the network last epoch, right? You're not going to see like, you know, your Coinbases of the world or others that are the highest APY, right? And you can't just get there by just, you know, setting 0% commission. You got to really know the network inside and out. And companies that are just focused on like, you know, like a bunch of other networks and are just like spinning up, you know, buying a server and spinning up, you know, like the stock validator client, they're just never going to get there. So that's one of the ways we also differentiate ourselves, is that like, we're not going to come to you talk about, you know, Ethereum, whatever. We are exclusively focused on Solana. We know this network inside and out. You want what's best for your customers. We want what's best for, you know, our customers. Let's work together.
And you also want what's best for your own capital. So complete alignment.
Yeah.
Max, I can't help but, you know, try to put myself in the shoes of most of the people that will be watching this that are somehow retail investors like we are.
Yeah.
And are trying to understand Solstrategies as a potential investment. Yeah. And I know that there are some things you can't say because of regulation, whatnot, but I do think that we should, you know, circle back a little bit to a comment you made that Solstrategies is a technology company. Mm-hmm. And that, I think that has two pieces when you try to figure out how there's an investment thesis that could be interesting here.
Yeah.
One is the financial implications of running your own validators. You said something I think is really powerful when you said costs are fixed, and when you have a certain amount of stake,
very important.
That becomes leverage.
Yes.
So you have a lot of leverage, and I think that plays very neatly into what you said, that you've gone through that acquisition phase, and now you're in organic growth. That makes complete sense. Yeah. Because you'll become too intensive of capital. That doesn't make any sense. You want to take advantage of that leverage. Yeah. So one thing, a simplification of that is Solstrategies stock levered play on Solana. Is that a fair assessment? Am I oversimplifying?
No, I think you're spot on there, right? And it's so like, you know, like I think I've been talking a lot about technical things. Let's talk more specifically about Solstrategies. You know, I think if you are thinking about investing in Solstrategy, and of course, like I'm not telling anyone to or not, I'm just putting together, you know, a hypothetical thesis here. But you know, here's the thing: Solstrategies is I would say definitely a leverage play on Solana. And the thing about it is we're running a validator business. You're also going to see us start entering into a lot of other verticals, I would say, in the Solana ecosystem game. But even if we're just talking about the validator portion of it, the more activity that happens on Solana, the more Solstrategies are going to benefit, right? And like, if we want to compare ourselves to like a pure NAV play versus, you know, like what we're doing, let's talk about that, right? It's like a pure NAV play. You know, you could hold Sol and, you know, you can track the price of Sol basically by it appreciating or not. If you add in this like validator component, which, you know, we do, right? We're making real revenue in Sol, but also too, as an investor, if you believe in Solana, the network, Sol, the asset, the more that happens on that network, the more it's going to benefit Solstrategies, because Solstrategies is capturing that value by being literally one of the biggest validator operators on the entire network, right? Someone brought up Helios Mert. He did a fantastic job. You got like 11 million SOL, incredible. Altogether, Solstrategies has like 3 million SOL, which like I know that's like a relatively big delta, but that puts us in like, don't quote me on these numbers, I don't have in front of me, like top 30 or 40 biggest operators on the entire network, right? So Solstrategies is like one of the biggest validator operators on the entire network. And then also to separate out like the NAV play versus what we're doing. Let's talk about like a bull case and a bear case scenario, okay? Where a bull case is that like, let's just say Solana just starts crushing it. The NASDAQ moves to Solana. You get so much volume. Solstrategies is directly benefiting from that in multiple ways. One, we get all the benefits of being a NAV play, right? If like, because we are holding SOL in our treasury, right? The price should appreciate. But second of all, we're capturing that real economic value. So in that case, we would go the price, we would be making more in revenue, right? Which in theory would increase earnings, which should increase the price of our shares. But even in the bear case, here's the thing is that let's say like, Solana just tanks, whatever. We are still making revenue by being one of the biggest operators on the network. And we actually, the downside is actually lower because of that, because we're making real we're making real revenue and not just a pure NAV play. So I do think it's a leverage play on Solana for sure. And I think that if you are a believer in Solana, I think Solstrategies, is really trying that's really the type of person that I think the stock is for, but not advocating for anyone to invest.
Of course. Max, so that was the first piece. The second piece is I seem to remember that either you or Leah in a separate podcast mentioned that you were also making venture investments from the Solstrategies holding company. And I think it references to something that you said earlier, because we're let's say I'm a new investor in this ecosystem and I go and buy Bitcoin. But when you said that you invested in Bitcoin, you invested in a whole bunch of things around the Bitcoin sphere of influence. So you're much more knowledgeable of what's going on, what innovations are coming out, what new folks are developing than most individuals. And this mindset and capacity to evaluate and access seems to be incorporated into Solstrategies thinking.
For sure.
Not only running validators, which is how the network is built, holding SOL, which could appreciate, and hopefully it will, but also where the new frontiers are coming.
Yeah.
Could you speak a little bit about, if I understood correctly, that venture strategy, how that complements this other piece that we've just talked about?
Yeah, absolutely. We haven't been doing too much with venture stuff right now, but we certainly talk to a number of different companies where we do find things interesting. We haven't necessarily invested in anything since I've been here just yet. But we again, kind of going back, we really want, we are extremely involved in Solana, right? I can give so many examples, but I think in the interest of time, I just don't know how long we can go. But we really are, we are at the forefront of the industry, and I would say this, that there's things that we would invest in, and I think it comes down to what we were talking about earlier, which is things that are going to increase like activity on Solana, real activity, that's say less extractive than say something like meme coins. We don't have like, I don't want to say it's like a full venture strategy at this point right now, but I think that is something that can develop, and we do talk with companies, but we aren't really investing directly in startups, at least in 2025 just yet.
I got it. And just one final thing, just to round out, my view of the equity value, or how the equity value comes to be with Solstrategies, is sources of capital. I think I read somewhere that you just made an agreement or to fundraise with an institution. Could you talk a little bit about where capital is coming in, and if there is a similar strategy to what we've seen at Michael Saylor's strategy to financially engineer a lot of things to benefit stock value?
Yeah, I had to be really careful about what I say here. But
that's okay. If you can't answer,
you can say no. Yeah, no worries.
Right,
Don't get stressed.
Yeah,
don't get stressed. Okay, so let me follow up with with two questions. So the first one is my intuition, but from what I've heard from you, and this is also because I have purchased Bitcoin miners, it seems to me that at scale, probably running a validator is more profitable at scale than actually running a set of miners. It looks to me like that. But you know better. I don't know if you can confirm or not. And at scale, I mean with sufficient amount of stake and obviously good engineering behind, because it always seems to me that miners are playing this chicken and this chicken game where it's like, oh, I'm not selling my Bitcoin, but I'm financing, but this is at a loss, and the hash rate is going up, and energy costs are like whatever. It's with you, it's like, oh, I think Camilo, and you can help me correct the question, but it looks like every quarter is going to be profitable because you're just yielding the rewards. But with miners, it's totally different because it goes against the halving of the curve. So it technically looks like a much more complicated business to run a Bitcoin miner from the economic standpoint than actually running a validator. Is that true or not?
Spot on. I think something, sometimes it's hard for me, because like I'm in Solana full time. But like if we're going to step back a little bit and talk about Solana versus other networks, fantastic point. Running Solana validators is like, if you compare any other network, it's like literally the most profitable one there is if you're at a sufficient scale, right? It is also the most expensive to start up on, right? Like with some small exceptions, like Sui, for example, like the hardware is like pretty similar, but like you need like $20 million to start a Sui validator. But anyway, the Solana is like, really in terms of like being realistic and not being like a multi-millionaire where you have $20 million to just go and throw away. Solana is like literally the most profitable network to run a validator on, right? And the points I talked about, the points you just brought up again, are like the most important things is that right now, like if you just have one validator, right, whether it has 100,000 SOL or 10 million SOL dedicated to it, the costs are like basically the same within like $100 maybe a month, right? But like the revenue you're talking about, orders of magnitude more in revenue, right? So and also too, is that like in Bitcoin mining, there isn't like a big brand component of it, right? Like Bitcoin is kind of like, you got to win. It's a race, right? And whoever guesses that value, whoever mines the next block, they're going to win. With Solana, a lot of it is branding and marketing, right? And I would like to think, and I think we have a pretty big name in the Solana ecosystem, Solana's first public company. And we can leverage that brand as well to go and attract stake. And in fact, we have, right? Like our organic stake has grown pretty significantly, in the past, in 2025, right? So that I think is like the biggest difference too, is that like with Solana, you can lean on a brand. The economics are vastly different, right? Just like it's not even comparable. And yeah, completely different than Bitcoin and really any other network, even Ethereum. Ethereum is far different.
So we definitely have that. We need, at the end of the episode, we need to list the validators that so that you drive some organic. Last question, and then we do any follow up or closing questions with Camilo. Solana has not had an outage for a long time. I mean, it's almost like, I know it's more than a year, but maybe like 2 years. Tell me, how does an outage look for the CTO of like 4 or 5 good validators? How crazy is it on Discord when you have to like restart the network? Is it that day? I mean, if you had an outage today, we couldn't get you for this podcast. How crazy of a day is that for you?
Definitely crazy. I've been there and I've done it. And in fact, just last week, we didn't have that, but you might have seen something that came out where there was like a critical security vulnerability that was patched. And one of the things like I talked about, Solstrategies is like trying to be like really involved in the network. We worked with like, Solana Foundation, Anza, Jito to be one of the first validators to patch that bug before it got out, right? But to talk about that, I've been there and I've done that, and I'll start with this: is that anytime an outage happens, for whatever reason, it always happens to be at like 2 or 3 in the morning for me, right?
Of course, when you're sleeping, yeah.
Of course, right? And most good tech companies, will have something called like PagerDuty or some service similar to it, where you have automated software that goes and basically just checks like, is this thing online? And then if it doesn't, oh man, like you get like the loudest noise ever on your phone. That's like this huge like choo-choo train. You could customize it, wakes you up, doesn't matter how deep you're sleeping. But then you're finally up, and in Discord, it's pretty crazy, because here's the thing: is that Solana's like decentralized, and typically what you'll see is like you'll see people like some validators being like, "Hey, my validator is down. I can't figure out why," and someone else will be like, "Oh, me too." And then like someone else will be like, "Oh, I just tried to do something on Solana and it's not working." And then quite like, after like a few minutes, you're like, "Oh, damn, Solana's down." Now, like a lot of people realize this earlier, but like that's the type of stuff you see in like Discord of like, sometimes like in the scale of like informed to less informed, and really in terms of like technical knowledge, you see like some of like the less informed people just only notice that their validator is down, but they don't realize it's a symptom of like the entire network being down, right? But typically what happens is that all the developers are getting paged. You got to isolate the issue, and you got to figure out how to get the network back online, because it's not something that just like, oh, every validator is going to go and spin it up. It's that you actually need to like first find out what caused the outage, figure out how to like skip that, or figure out some way to amend the data. And then the hardest part is that you need to get 80% of stake to adopt that new version, right? So it's a massive coordination effort where like the network is not going to be online until 80% of the network gets back to that new version. And like for us, it wouldn't matter. Like, okay, let's say our validator was down and we just restarted. That wouldn't do anything, right? Because it's a decentralized network, and all the nodes have to come to consensus in terms of what the right state is. In the only way, like in the event of an outage, which meant something terrible happened, we need to get everyone on the new version, and 80% of stake needs to get on that. In the last outage, we were able to do that in like 24 hours, maybe a little more, a little bit less, I forget. But pretty impressive, to be honest. And I think it just shows like everyone in Solana is like really close. Like, like that's why I think a lot of developers go to Solana too. Like everyone's just so willing to help each other. We're all in Discord together. That's the way it works.
That's something that I've heard from Kyle Tamani, that the speed at which the community on Solana moves it's totally different versus how Ethereum moves. Yeah, it's like academics talking philosophy versus engineering. Let's just do trial, test, run, and just be more pragmatic about it. So yeah, that's pretty cool about the Solana community.
Yeah, absolutely.
Camilo, you had one last question or two more questions?
A couple questions maybe. Max, how do you see, given the importance of validators, as you've explained today, how do you see this role evolving? As the responsibility that you've just talked about is huge. This is obviously decentralized, but as more transactions, more real-world assets are flowing through the Solana ecosystem, that responsibility is even higher. And I know you pay for it with staking. But do you see this role evolving into something else? Do you see it changing somehow?
Yeah, well, I think we're going to talk about the role of Solstrategies. First, let's just talk about the validator piece. Is that, one of the things that Solana tries to do that's different than other networks is it tries to quite literally scale with hardware. One of the reasons for that is like, Ethereum, everyone talks about like Ethereum moving slowly. One of the many reasons, right? I'm not saying like there's just one of many reasons Solana scales so quickly is because it scales with something called Moore's Law, where basically it's a theory that basically hardware gets 2x faster every 2 years. So in the context of your question, one of our jobs is to make sure we're running on the most cutting edge hardware that there is, right? Because the whole point of Solana is that if you make the most use of the hardware, you can double throughput every 2 years for free on top of other software optimizations that, you know, like some other networks like Ethereum, you know, like optimized for and things like that. Like Solana can do all those things, but if you make the most use of the hardware, you build the software to make the most use of the hardware, you get a 2x scaling improvement roughly every 2 years, right? So that's one of our things. And there's other networking and bandwidth components, but I think like one of the things I want to add to like the whole Solstrategies piece is just this, is that, you know, like right now we talked a lot about staking, and, you know, we are doing quite a lot there. But you know, we're going to start moving into, you know, other verticals as well. I think you're going to start seeing more there, and, you know, RWAs is something we're really interested in. There's others as well. And when you talk about the role, you know, the way I view my role at Solstrategies, and hopefully that was your question, but it is really to help Solana succeed, right? And other things that, you know, we've been doing, we have a technical blog now, you know, just shared something, you know, did pretry well on Twitter.
It was pretty deep. Yeah, I tried to read it and I understood 5% of it.
That's okay, right? But you know, there's more blog posts coming. And you know, our role is to be a shepherd to help Solana succeed, right? You know, we are fully invested in Solana, and, you know, you're going to start seeing other things from us, you know, some applications, some other verticals, things like that. That's really where we're going to invest. I think just the last thing to answer your question, validators are always going to be like the most crucial part, really one of the most crucial part. I would probably say RPCs and validators are really just like the two most crucial parts of the network. Without those two, you don't have Solana, full stop. You know, validators need to be running on like the most cutting edge hardware, with like the most.
Se congeló. Yeah.
You know, realizing that you're down is actually like not like that easy of a problem. So you need software to monitor all this stuff, right? And fix the incident as quickly as possible. You know, which I think we have pretty robust systems. That's what I would say.
I get it, and I understand completely, and I think it's been made perfectly clear throughout the conversation, which in my mind I knew was important, but not as important. My last question is maybe just touching on something you just mentioned regarding hardware and connectivity, and so and that piece. Given what's going on in the world today, and you know, these components being so strategic to China, they're strategic to the US. You know, the companies involved are getting intervened somehow. It's getting tricky, and no one knows where this is going. But I would love to hear your thoughts on how you guys think about that potential risk or opportunity. I don't know how you guys evaluate it.
Yeah, and I guess you mean, just to clarify, in terms of tariffs and stuff like that?
Correct. And availability, there's AI, there's a lot of demand. You know, there's a whole bunch of things going on in that space that could make it challenging.
Absolutely. Yeah. You know, well, I think it's like one of the things that we do, and one of the things I talked about in our blog post is that if you don't like, you know, like we need to run servers somewhere, right? So we need servers, but one of the things that we do is we run with multiple providers, right? So in the case that, like, you know, one particular provider, and in multiple different jurisdictions as well, just FYI, right? So we have validators that are running in the United States. We have validators that are running outside the United States, predominantly in Europe. We set ourselves up though, where that we have complete geographic redundancy, right? And there's many reasons why you want redundancy. One of them is for, you know, just like, you know, like a natural disaster or like, you know, really just like, I don't know, like a data center goes out, something like that, right? Like you don't want all your validators running there because, you know, then all of them are going to go down. But you also have things like you just mentioned, which, you know, you can kind of couple into compliance disasters, right? And I don't know if I would put tariffs in there. I guess you can kind of do it, but, you know, tariffs are certainly something that causes it. That's another reason why we run in multiple jurisdictions. Each validator that we run, we actually run 2 servers for. There's an active one and there's a passive one. And if something happens to like the active one, like no staker or anyone would have any idea, but we actually make that passive server, which we pay double for every validator, becomes the real validator within like a minute, right? But to answer your question, I think a little more concretely, the tariffs haven't really affected us too much. Like I would say mainly, except like with what's happened in like the overall macro market in terms of crypto, right? Obviously prices have gone down, but in terms of like our true business costs and operations, they haven't really affected much. And even if they did, we have relationships with a bunch of different data centers, hardware providers, where we would be able to switch really quickly. And it really just wouldn't affect us. Like the whole thing is built around redundancy. And if it made sense for us to move everything into the US, we would.
Max, last 2 questions. What needs to happen so that we have a validator in Medellin, Colombia? Would that be of any practical use for you guys? And if so, what do we need to start scouting for you guys so that you actually set one here? And the last one is, I buy Cypher via OTC on E-Trade. Yeah. What needs to happen so that it's just directly listed? Is that a cumbersome process? Because that way, I mean, I can buy it on E-Trade, but I cannot buy it on Robinhood. What needs to happen?
Great questions. Number one, on your point on Colombia, fantastic question. Actually, for a while, so when we first announced the Pengu validator, by the way, it was running in Chile, which I believe we were the first validator to run in Chile. But we actually moved it because there's a few difficult things, and this is like the pro and con, I think, of Solana. A pro and a con is that the network is so fast, right? And the thing is like on
speed is a must. That's it.
Speed is a must. And when you look at a country like Colombia in the context of like its geographic, in terms of where it is geographically relative to other countries, the way validators can optimize for like making higher rewards for their stakers is by voting faster. What I mean by that is just basically like verifying a block faster. Now the Solana, the block times are 400 milliseconds. Just to go like the speed of light to go from Colombia to Europe, don't quote me on these, I forget, but it's probably somewhere around 100 milliseconds, right? And most of the stake is in Europe, but there is a good amount of stake in the US. And it certainly is possible. One of the things that's making it harder for us, I've run validators in Australia, I run validators in Japan, I've run it pretty much like everywhere, although I haven't done Colombia, but like in pretty much every major, I've run a validator in every continent besides Antarctica. Bandwidth can be really expensive in those countries as well. But we would love to do something. In fact, there's actually, sorry, this is a very important point. I'm going to give someone else a shout out. There's a stake pool dedicated to incentivizing validators to run in Latin America. It's called JagSol, where they only delegate, it's a liquid staking token. That's a big word to the audience, don't worry about it. But they delegate SOL specifically to validators in Latin America, where like the point of it is that like, yes, your performance is going to be worse. So it's going to be harder to attract stake, but JagSol actually delegates stake only to validators in Latin America to help kind of offset that cost.
Interesting. And the last one. Yeah.
Go.
No, the last one. The last one for the ticker.
Oh, sorry. The last one. Yeah, this is, this is a tough one, right? Because I even feel it too. But there's like a few answers to it. We're publicly filed for NASDAQ, right? And that I can't comment on when that would be, but we are publicly filed, and we're looking at that very closely. And I think that would make things much easier for people to buy. But I think something we would like look into is any options we have on chain as well. Like that's something we would be interested in.
Of course. Max, this has been terrific. I don't know, Camilo, if you have any last questions. In order of importance, if people want to stake with Solstrategies, Orange Fin Ventures, Cogent Crypto, Lane, and Solstrategies, or of the 4, which one should they pick? Just one, so that we make it easy for them.
I would say Solstrategies.
Solstrategies, great. Max, I don't know if you have anything that you want to say, or if people follow you, they should follow you on Twitter. I'll just share. What's your Twitter handle?
Yes, my Twitter handle is Max E Kaplan. Post a lot of like technical nerdy stuff, but I also post a lot of data. So if you're interested in learning more about Solana, throw me a follow. try and reply. I try and reply to everyone. So yeah, hopefully I can help.
You actually do. Yeah, you do. You're very executive on that respect.
Cool.
Camilo, any last questions?
I don't. Max, thank you. This has been very, very illustrative. I appreciate your time, man.
Yeah,
Thank
we are definitely very bullish on Solana, but just talking to you added an extra 5% of foolishness.
What do I need to do to make it 10? No, I'm just kidding.
Well, we are already invested in Cypher, so I mean, it definitely makes it.
Yeah.
Max, thanks a lot, man. Have a good day.
Yeah, thank you guys. Really appreciate it. Thank you. Bye-bye.
Perfecto.
Okay, bye.
Gracias, Max.
Bye-bye.